Hey everybody, welcome back. And we're going to have a really good show here today because we're going to go over the July metrics. So here's the funny thing. If you could get information each and every week, and in fact, get it 2 weeks to a month before other media outlets, other news outlets give it to you, wouldn't that almost be like insider trading? Because you'd have a week to 2 weeks of a head start of information that they're going to give you later. Wouldn't that be of value? Well, that's the benefit of coming in every single week. There's no marketing. We go through consistent metrics. We give you really good information so you can noodle on it, ask your questions, and make a really good business decision. So with that, let's get the show on the road. All right, so here we go. We got home prices still rising year over year, but the momentum, well, it's fading a little bit. And what that means, as we take a look at this, we are still seeing a very consistent level of sales, a consistent, balancing of new homes coming on market, both new construction and resale homes. We're seeing that consistency come in, which is awesome. Now, are we making these massive, 10, 20, percent appreciation this year? No. Are we still heading upwards? Yes. The question is, are we starting to see our market soften a little bit? Not really. This is seasonally normal, even though some of the metrics, when you look at solds, remember, you're looking in the rearview mirror. Whoop, we're over there, right? And when you do that, that means that the July sales were actually in June. So in August, we're going to see the true July sales, and we're going to go into that and how mortgage interest rates are playing a role into that, all right? So as we go through this, each and every week, we go through the metrics. Same metrics every week, so you have a consistency. They are single family based only, all right? Condos are a different report. You can request those. We just have a higher desire for information on single family, which makes sense. That's mostly what we see. All right. So as we roll over and we take a look at this metric, take a look at this. So when we take a look at the longer term, meaning that we're going back to 2009, okay, and we talk about what we look at as far as trends, home prices versus percentage of change. So you can see in 2009, we were still way down, which was after the 2007-8 debacle. And then we started making our recovery at about 2014. We saw, 13, 14, we saw a significant increase. And then we roll over to 2020, right? And then boom, it goes off the chart, right? And then of course it comes back down and we start to normalize, but you can still see that even though we're bobbling along, we're not going below the zero line, we're staying above the zero line, and that is a big deal. So when we roll over and we take a look at some of our headings, look, the first one, upper left, pending home sales, slip again underscoring market stagnation. And then the bottom left, home price is still rising year over year, but momentum is fading. And that is part of the real estate side. So when we go and take a look up, it says, listen, look, our 30-year fixed mortgage, we were at 6.75, 6.76, 6.73. Look at that, 6.63. As we continue to come down, we're going to see more buyers coming in. We're going to see more activity. We're also going to start to see a flurry of activity between now and the end of the month. Why? Because we got kids getting back to school. We've got people wanting to get settled for the summer. We've got activity as far as students going off and last minute vacations. That's all going to start hitting towards the end of August. And then when we, trigger for the season change, then we actually start seeing more activity because people have taken their vacations, blah, blah, blah. So October-ish, we start to see a normalization of the market till, first part of December. All right, so let's take a look at the rest of this. Bottom right, mortgage rates hold near July lows ahead of the job reports. Okay, here's what's super important. In this narrative, I said, hey, listen, are the Feds going to, drop rates in September? I think there's a good chance that they will. It's a 50-50 chance. Based on the jobs report, depending on how that works out as we get closer to September, that is going to tell the Feds, hey, CPI, Feds, inflation, where are we at? And as those numbers start to show positive signs, okay, meaning that stabilization and inflation, coming down, there's a higher probability the Feds will drop rates by 0.25%. Okay. However, if we don't see those positive figures, they're going to blow right past September and then continue on, which if you are buying a home, you probably don't want the Feds to drop the rate. Because remember, the Feds don't control mortgage rates. Super important to remember. They control the credit card payment interest rate that you have, car payments, what banks lend to each other on a day-to-day basis, HELOCs, home equity line of credits, almost forgot. Those are the rates they affect. Mortgage rates are publicly traded. And when the Feds, the last 5 times they've dropped rate, mortgage rates actually have gone up. And that's not super exciting for you at all. So you want that continued trend so that we don't bounce up into the mid 7s, low 7s, that we continue down into the mid 6s, low 6s, which then creates a flurry of buyers and refinances, which you will see. All right. When we move on, let's take a look at what Freddie has to say. So Freddie Mac, as you can see, we came down, we started to go up again, and then, of course, we're heading in a slight downward trend again. They're saying it's at 6.72. That was on Friday. That, again, year over year and week over week, that is a lower amount. So the interest rates are 0.02, 0.03 lower than where they were last week and last year. So all things considered, we're doing really well. And this is a normal interest rate for us to be bobbling in. Okay, so based on that, a lot of buyers are starting to realize that as they acclimate to a lot of new things. New construction is the one arena that has taken a little bit of more of a beating on that, although they're improving some of their numbers. Okay, so if we then move over and take a look at this. Here's the funny thing. Let me remove myself off of this so you can see the whole thing. All right, we have a mortgage calculator. It's free. Go to it. Doesn't cost you anything. There's no login. There's no nothing. You can take and put 4 different mortgages on there and look at that, put different time ranges, interest rates, things like that. Super, super easy to use. And there's a video there, 5 questions you must ask when getting quoted mortgage rates. Look, I cannot tell you how important it is. There's no marketing there. It's free. No login. What more could you ask for? Other than me just to, I guess, hand deliver it, which I won't do. But anyway, back to my point. It's a great tool for you to evaluate different programs, okay, different lenders. But again, make sure you're getting them all at the same time and that they have the same criteria for the mortgage loan that you're asking for. 5 questions to ask. Just keep that in mind. All right, moving on. Let's take a little bit about what's going on. So when we take a look at the July numbers, hey, look at that. Okay, so last year, average home was selling for 32 days. This year, we're selling on average of 37 days. There's a 5-day increase. That's not monumental. Normal that we start seeing a little bit of a creep up. A lot of that has to do with some of the fluctuation. Last year, we were selling at 100% of list to sales price. This year, we're at 99% for the month of July. Again, pretty small potatoes. When you look at the middle chart, look, that's pretty straightforward. Not much change at all. But here, when we take a look at the 7-day running average, look at this. Okay, so we have 967 homes that came on market, okay? But wait, we're at 1,180 homes that went off market. That's super important to understand because even though we had about a month during our kind of late spring market where we definitely had more inventory coming on market than going off, but still yet again, very close. That's super important to understand that we're now starting to see fewer homes coming on, balancing out our inventory levels. Not that they were crazy high. We're only at 2.8 months of inventory at a peak. But now we're starting to see less homes coming on, seasonally normal, more pended as rates continue to head down. We're going to continue to see that drawdown on inventory, which is super, super valuable. And the reason that is it helps to maintain that balance. And again, that's exactly where it is. I'm saying we're at a balanced market. Sure, it used to be the old adage, 4 to 6 months of inventory, put a lid on it, no more listings going in, we would last, and that would be a balanced market. Okay, I'm saying that hasn't been the case for over 10 years. And 2 to 3 months becomes more of our balanced market. 2.5 to 3 months is truly where we have enough inventory coming on, enough inventory going off, that they're just right there. If I was a wait, I would be more really towards the center, maybe just a teensy weensy to the seller. Tiny little bit, except for overpriced homes. If your home doesn't sell in the first 10 days, you are overpriced. Now that's going to lean towards the buyers, okay? And you have to start giving up concessions. All right. Sorry, it's just facts. All right. Like Joe Friday, just facts, man. Okay, let's take a look at our deep dive into our July numbers and how they kind of balance out. Here we go. So right now, we're at 0.9 more sales than where we were at last year. That's the far right column. And 2.9% more pending. When we look at the center column, the colored column, look, for the month of July, we ended up closing out 37 homes more sold than what we had last year. That's super important because we were lagging in July for most of the time, but we definitely had a end of year surge or end of month surge, which again, remember, those are end of June surge sales, but we still had more pending. That's a very dynamic number also. So when we come back, look, we had 775 more homes go pending, or 14% more for the same month of July year over year. And of course, again, we're at 2.9% more than we were at this time or year to date than over last year. Super important. Now, if we dial this in a little bit tighter for you guys to see, that's easier for you to see right there. Listen, when we start seeing the consistency of the numbers that we are like this, when we see the pendants continuing to grow year over year, that is excellent. But then the next question is, when we take a look at the actual sales volume, and if I get myself out of the way here, look at this. So we're 1.1% higher in sales price than where we were at last year on a year to date. For the month of July, even though August is showing to be a slight improvement, July was $4,000 less, just the month of July year over year. And that's not a big amount. That's actually pretty small, all things considered. But it just shows that July, even though we had good volume, our pricing was, well, it's kind of on par, just a teensy weensy little bit. In other words, our list to sales price went from 100%, meaning if I list my house for $100,000, I sell for $100,000. That's 100%. If I list my house for $100,000, I sell it for $99,000. That's a 99%, right? And that's where we're at. So that's where that 4% or that $4,000 kind of comes into play, where we should have been maybe a little bit more. But I think that as we take a look at our close sales, again, those were June. In August, we'll see July because it takes 30 days to close. So we will start to see truly what were the July numbers versus where we were at for June, which is always just a lagging number. It's kind of, once you wrap your head around it, you're like, oh, okay, closed our last month because it takes 30 days to close. Okay, I'll get it. So that's why our numbers, kind of skew towards the end of the year as, again, we're looking at last month. Now, if we pop over and we start taking a look at new construction, circled this one because, again, super flat, okay? We had a little bit more inventory, but it started leveling off. Builders started slowing their production down, which is absolutely normal because we had a significant increase in resale homes, which was super helpful for all the buyers out there. When we take a look at these numbers, let's blow these up. Look at that. So they made some pretty good headway year to date. Top chart. Look, they're off almost 600 homes closed than where they were at this time last year. Okay. When we take a look at the number of pending, we're off about 760 home pending. And again, what is the biggest cause for this? Look, they're offering great incentives. They're offering a lot of different things. Sure, they get their premium over existing construction. But look, we had a lot of resales come back onto the market. Okay. And that opened up a lot of opportunities for buyers, which was absolutely desperately needed. And that's what they got. But builders, that's not what they want. They want very low inventory so they can maximize, their sales and continue that progress. I get it both sides. But for the buyer that it's just a bigger benefit. Even sellers, it's still, again, a bigger benefit because it brings more buyers to the table. All right. So if we come back and we take a look at the average sold price year to date, we take a look at it, it's up 1.8%. Not much, but hey, it's still $17,000 over where we were at last year. Excuse me. So that gives us a really good metric as to what we're going to be looking at. And here's a good indicator, since a picture's worth 1,000 words. It shows you exactly what we've done since June. When we talk about July sales, which are going to show up in August numbers, you're going to see this. And that was pretty impressive. They did some really great incentives and whatnot. Let's talk a little bit about bank-owned homes. Again, super, super boring. Again, very few homes that are actually out there. When we take a look at our actual numbers, look, year to date, yeah, sure. Okay, so we're 15.4% more. As you can tell, that's 12, 14 homes. That's all. When we take a look at just the month of July, we had 29 more homes come on market this year than last. New, as far as newer inventory, was only by 8. But look, we had 18 more sales and 19 more pended than we did last year. Still not very big numbers at all. They look like they're big numbers, but that's because we're using such tiny numbers to begin with. All right. So when you have questions, put them down below. Love to hear what you guys have to say. Smash that subscribe button. Let us know what you think of us. And if you have questions, again, reach out, post them below, send me an email, send me a text, doesn't matter. We will get back to you. There's no strings attached. We just love helping others. In the meantime, it's a beautiful weekend. Have an absolutely beautiful day. And I will see you on the next video. Take care.